We often hear the term jumbo mortgage get thrown around, and for most people, they don't really truly understand the difference between a jumbo mortgage and a more traditional conforming mortgage. Hey guys, it's Evan Swanson here with Guild Mortgage, here to explain a few key details for you if you are curious. First off, let's start by defining a conforming mortgage. For most of the United States, for 2025, the most a conforming loan will allow is a loan amount of up to $806,500. And the underwriting criteria by which these loans are underwritten are written by Fannie Mae and Freddie Mac. Therefore, the rules around underwriting are highly standardized lender to lender. Now, this differs from a jumbo mortgage because a jumbo mortgage have loan amounts that are at least $1 above the conforming limit. And Fannie Mae and Freddie Mac don't write the underwriting criteria. There are literally hundreds of different jumbo loan programs out there, and each loan program will have its own individual set of rules and criteria that applications need to follow in order to be approved. Let me show you a few key differences. First off, the down payment requirements for a conforming mortgage, we know that the minimum is typically 3 to 5% down. For a jumbo mortgage, on average, the down payment requirements are higher, between 10 and 20% down. Now, it's important to note there are a few jumbo loan programs that allow for 0 to 3% down. Credit score requirements tend to be higher for jumbo mortgages. They want to see higher credit scores as compared to a conforming mortgage. And furthermore, jumbo loan options typically want to see more credit depth in that credit report than a conforming loan. In terms of cash flow or measuring debt to income calculations, jumbo loans tend to be more conservative, meaning that they will not allow for as high as a percentage of debt to income as compared to a conforming mortgage. Now, another difference is in the assets or financial reserves that a home buyer has after closing. Conforming loans oftentimes will not require any financial reserves, whereas a jumbo mortgage will oftentimes require that borrower have between 6 and 12 times the mortgage payment saved up in an account or retirement fund in order to be approved for that loan. Lastly, with conforming mortgages, we heavily rely on an automated underwriting system that looks through the file and dictates an approval and what conditions or documents we need to follow up with. Jumbo loans tend to be a manual underwrite, which again is oftentimes going to be a little bit more cumbersome. Depending on how much a borrower is looking at borrowing, there could also be more cumbersome appraisal requirements. Jumbo loans generally will not require for any sort of appraisal waiver. And for higher loan amounts, oftentimes above $1.5 million or $2 million, jumbo underwriting criteria will require more than one appraisal. If you have any questions about your options and want to look with a professional lender that has the ability to offer you many different jumbo programs, please contact us today. Thank you.